Big question is, of course, where do we go from here on? To discuss that, Kunal Bothra, Nooresh Merani join us on the technicals, and Rahul Shah joins us to talk to us about the fundamentals of the market. Kunal, your view, 44,000 eludes when it comes to the mark of Bank Nifty, and the Nifty too not very comfortable about 19,800 mark, seeing a bit of sell-on rally type of momentum as well.
Good afternoon, Nisha. So I think it's a natural reaction for the indices because at one point of time, one of the major sectors, which is banking index as well as financials to a larger extent, they're underperforming. So to find that right sector balance, to try and have other sectors as well as other stocks from the Nifty 50 trying to offset the potential losses or from the weakness in the financials and the banking, I think it will take a lot of time for the markets to get into a settling phase. But on the other hand, what we are also looking out for is that every time when the index goes into those narrow phases of 2 days, 3 days of consolidation, it actually results into the index giving a breakout of sorts. Like for example, in the last 3 days, we retraced some 200 points, 250 points on the Nifty, and I think we've managed to just recuperate major part of the losses from that 19,875 mark to 19,600, which we made a low a couple of days back. So I think in that aspect, the trend for the index is still on the bullish side. But yes, in terms of the market mix, because of the lack of momentum from financials, banking names, as well as few of the other large cap stocks, the move looks to be a bit more somber than what it actually, or what generally plays out when you see an index breaking out.
Right, Nooresh, let me bring in your view, because today what is happening is a bit of a different story than we normally see in terms of the market, is that, the mid and small cap is not outperforming. It was not the outperformer versus the benchmark indices. What is that trend that you would say in terms of the broader markets versus the benchmark indices? Is that something that we could expect as a trend in terms of benchmark versus broader markets now?
So today is a day when the mid cap and the small cap indices are flat, and we are seeing a 100-point uptick on the Nifty. Now, for the last few weeks, we were seeing the mid caps and the small caps outperform. So that is a welcome change, wherein finally we are seeing some heavyweights make a move. For example, Reliance Industries has hit almost a 1 to 2 month high. That is the first time it has done so in terms of the last few sessions. So relative outperformance and taking leadership. If this continues, this could go towards 2,500 and help the Nifty go up. So overall, the view is positive on some of the heavyweights. We are seeing some bit of, say, outperformance coming in. We could see some follow-up over the next couple of sessions at least. So positive on large caps to do a little bit of a move over the next few sessions, specifically Reliance Industries to take lead.
Okay, so that's the take coming in as far as the index is concerned. But Rahul, let's get your view regarding the insurance space. It's been seeing quite a bit of positive momentum for the last 4 to 5 trading sessions. Today, SBI Life, HDFC Life is doing well. Even the general insurers like New India Assurance are perking up as we speak. Is there something to look at positively in this sector, or there are better opportunities available and maybe not the best time to look at the life insurance or general insurance plays?
Hi, good afternoon. So I think obviously, if you ask me in terms of vis-a-vis other opportunities, then yes, I think other opportunities in terms of returns could be much better, maybe in financials as well. So I think banks offered a lot of value right now in terms of the valuations and the quarterly performance and what we saw post numbers also, as well as the commentary from the management was pretty strong. So I think that space, I think financials and predominantly private and public sector banks remains should be a focus from current levels. Well, I think insurance companies, I think obviously the stocks, some of them have moved up in last 3-4 days, but I don't think so. I think major thing to look at in near term, anything is happening. So as a part of an allocation, yes, I think general as well as life has to be part of your portfolio, something like Star Health or something like ICICI or maybe something like SBI Life. So I think part of the portfolio has to be there. But I think the major focus, if an opportunity is what I feel is, I think the banks must be in a focus from current levels.
Right. Rahul, I want to talk about, what I was talking about in terms of the realty play, right? Realty, when you look at it as an overall Nifty realty, obviously strong gains we've seen. But a lot of these individual stocks also, we have seen a lot of, in terms of expansions or strategy-wise, like foray into different areas as well, and premiumization, luxury trend, that's been working out for them as well. So anything that, you are finding quite exciting in the realty space, do you think that, this is something that will further lead to a better fundamental side for the realty players and realty companies?
So I think overall real estate as a sector, if we look at it in last year, year and a half, I think every quarter when the number comes up and the management gives up the guidance strongly and they have delivered. So last 2 to 3 quarters, we've seen all-time high sales reported by a lot of companies in their quarterly performance. So again, when we look at it, I think most of them in near term, I think if we look at this quarter numbers as well, I think be Oberoi's, be Prestige, be your Suntech, or maybe be anything like DLF or so on and on. So I think entire sector, if you look at it, so I think a lot of stocks are at multi-year highs. And maybe I was just looking at today, I think a lot of stocks like DLF, so, or Prestige and all. So there are, all of them are at 15, 16 years high. So my sense is I think the sector has got into the new trajectory. The numbers is talking about it. And I think way the things are, I think looks like I think still the entire real estate sector will do continue to do well from here.
Place when it comes to the construction and the real estate sector, but in the last few minutes there is a spike on the likes of CESC. SJVN is trending higher. NHPC is one stock which is coming on the radar. Indian Energy Exchange is also perking up. Nooresh, any merit in buying into any of these names?
So the whole power pack looks interesting. NHPC is the most interesting one because that's been a stock which has not really outperformed the way we've seen SJVN, etc. So NHPC at 54 odd levels looks promising to for a move towards 60-65 with the short term. And then you have CSC, which I continue to like. The stock has broken out of a multi-year price movement. So the stock used to be 9,500 back in 2018. So it's a good breakout here, good price action and volume. So like CSC and NHPC at current levels.
Okay, that's the view coming in on CSC and NHPC. But, Kunal, an interesting play that is coming out is now Nykaa. While other companies, whether you look at a Zomato or a Paytm, that actually surely did see a run-up before that. But Nykaa, is that on the charts now something that is a time or a story for a run-up for Nykaa?
Well, it seems like, because what actually started off with probably a false move for Nykaa. I'll call it a false move because there was a point, when the stock I think bottomed out at 118 or 120 mark. From there on, there was a false move for Nykaa where the stock had come back above the 200 moving average. That was I think around 145, 148 mark for the stock price. But from there, the stock had fallen down very sharply back again, had come back to 120, 130 odd mark for Nykaa. So that was the point where the stock was still not confirming a breakout for itself, even though it had traded above the 200 moving average for a few trading sessions. But this time around, after the second retest of the stock towards the long-term averages, I think the chart structures have changed significantly for the stock. So not just breaking past above the psychological 150 as well as the 200 DMA, the influx of volumes which have happened for the stock, even that's very positive. So I think we are definitely seeing a change of structure over here. So this 145, 150 mark, which is the previous breakout point, that should act as a major support. And keeping that as a stop loss or a support range, I think traders could still look at a buy on current levels as well as on dips.
Okay, buy at current levels as well as on dips. A positive commentary coming in there for Nykaa as well. But earlier we also spoke to Venugopal Gare, Managing Director at Bernstein as well. And he has his views. He has some of the new age tech companies in his portfolio as well. So what was the strategy behind his investment? What does he look at? Let's listen into that and then slip into a short break.
Broader thinking primarily was more centered around business models where we potentially felt that the competitive risks are relatively lower. So that was one broad thinking. So if I look at all the three consumer tech companies that we have, they are primarily dominant players in their respective end markets. And I don't really see them being in a situation where competitive risks are going to be intense. So that's the way the selection was essentially done. So two of them, which basically one of this e-commerce logistics company and the other is a food delivery company, of course, were introduced much earlier. Paytm was more a recent introduction because the coverage came in more recently, but it's the same situation there. But broadly, overall, consumer tech as a space, we went overweight in January of this year, which was our way to play IT overweight. Right? So that's the way we had sort of squeezed out of their IT services, positions. But that's something we are going to actively be relooking at as to whether to tilt that position a bit more favored towards IT services, for next year.
Saying closing trades on ET now, and yes, market's nothing exciting as of now as well. At the similar levels, below that 19,800 mark, but trading with a gain of almost 0.4% as of now as well. But what's exciting is the action that is going to be happening in the IPO market this week. And just the first one that has opened up for subscription today is IREDA, that is open for subscription. Let's go across to Vamakshi to get in more details on the subscription. How is that looking like, and to talk more about the IPO as well. Vamakshi?
Well, yes, IREDA is expected to raise around 2,150 odd crores with its IPO that has hit D Street today in itself, and the company plans to raise nearly 1,290 odd crores from a fresh issue, which will in turn be used to improve the company's capital adequacy ratio. The remainder is via a offer for sale, and with this, the company's shareholding structure will undergo a change. Government currently owns nearly 100%, and this in turn will decline to almost 75% post the company's listing. Now, keep in mind that this is a mini Ratna government enterprise, but it is administratively controlled by the Ministry of New and Renewable Energy. The company extends financial assistance for renewable energy projects and energy efficiency and conservation projects. The company has a loan book of almost 47,500 odd crores, which it has managed to grow from FY21 to FY23 at a CAGR of almost 30%. Not just that, the company has managed to post a very strong growth in the net interest income, growing by almost 16% CAGR, while the net profit has grown at a CAGR of almost 58% over the same period. Yes, the spreads and NIMs have come under pressure, and that was mainly on account of the yields coming under a bit of pressure over the last few years. But the operational efficiency of the company has seen a marked improvement, with the cost to income ratio reducing to almost 78.57 to almost 64.69% in the first half of this year itself. This in turn is reflecting in the company's improved return ratios. Now, moving on, the company's prospects look quite bright. The company is well capitalized to sort of capitalize on the rapid growth in the renewable energy sector. The loan growth is also much faster as compared to some of its peers like PFC and REC, and this growth trajectory is expected to continue ahead given the company's plans for diversification and expansion. Moreover, the company is also very relatively fairly valued. In fact, the FY24 price to book for the company is around 1 times as compared to PFC and REC, which stand at around 1.2 times. So definitely the stock, the IPO is looking quite attractive from a valuation perspective, and the IPO has actually received an overwhelming response on day one itself. It has been fully subscribed 1.38 times till 2:24 p.m. today. So as of now, the IPO looks fully subscribed.
1.38 times till the time of around 2:30 today. The QIB portion was subscribed 1.2 times, the NII 1.5x, and the RII portion also 1.4x. So seeing quite a bit of interest on this one. Not just that, as we talked about, a lot of IPOs lined up, right from a flare pen to a oil company, plus a Tata Tech, of course, the big one to watch out for, and Fed Bank Financial as well. So all this to watch out for. But specifically on these power and infrastructure financiers, Rahul, what's your take? PFC, REC had seen this sudden re-rating of sorts this year, and given the kind of subscription figures we have seen for this one, looks like the space is likely to continue the momentum.
Yes, I think I agree with you. I think way the momentum we've seen in this power financing companies, PFC and REC, I think after a long time, I think we've seen the stocks trading at back to the good valuation. So I think still, I think this sector will continue to remain in momentum, and we've seen the guidance also post numbers from both management of REC and PFC. So I think looks quite interesting. This will continue to grow, and I think reasonably valued still at this time, at this price. So I think again a 20-25% decent returns can be made from here in both REC and PFC, and still if we look at it, underowned by the investors vis-a-vis other banks and all. So I think both will continue to do well. Looks like that could be a re-rating, and plus a healthy dividend payout also. I think if we look at REC's and PFC's payout policy of 30% distributing that PAT, so I think that will remain healthy. So my sense is I think both REC, PFC could be a good bet from here onwards as well. And I think the new IPO as well, I think, which is reasonably priced at one-time book, and as you rightly saw that, I think a lot of subscriptions we've seen on the first day, I think, and I think it should list at a decent premium from the IPO price.
could expect a decent premium from the IPO price, and this is just the beginning this week, right, Anisha? So many of these names that are coming in, and every day, a lot more updates on that front. But Nooresh, let's just talk about SJVN. We're seeing very high volumes in this one today as well. On the charts, SJVN, what is the indication for that? How is that looking like? And, obviously today, look at the gains that we've seen, also 7% uptick as of now.
So the stock for the last, say, 2 weeks was in a very tight range, roughly, say, somewhere closer to 75 on the downside and 78, 79 on the upside. Today, we've given a breakout above those levels and getting close to the previous all-time highs of 83 odd. So the momentum is strong. The risk reward is a little not great, given that the stock has moved up from 35 odd levels. So out here, one could actually be looking at a strict stop loss below 76. And expect a move towards 90 in the short term. So SJVN looks interesting. Similarly, the whole power basket, the smaller names like NHPC and CSC are also seeing momentum. Even a micro cap name like BGR Energy has come up. So the whole space has been buzzing. One can look at NHPC and CSC as relatively better bets.
Sure. Kunal, what about the auto sector? A lot of big movers this year. TVS Motors, of course, in the last 1 to 2 months has also done very well for itself. What's your view going forward? Which is the top stock apart from Tata Motors, if I had to ask you? Which is the top bet?
So Tata Motors, of course, is one of them. And
Tata Motors has always been your favorite. I think
Tata Motors, Indus, these are your top bets that he can say pretty much in his sleep also, and he'll be like, yeah, these are the
so
stocks.
I think the other stocks which have actually popped up is Hero MotoCorp. I think that's a chart which is now at 33, 80, 90 levels. The last I had seen for Hero MotoCorp. I think that's something which looks very attractive. I think the last 1 week of price up move for Hero MotoCorp has managed to break the shackles as such for the stock, because it was an underperforming name. There were many false starts for the stock price, but then it never used to get converted into a breakout, neither into a rally. What also excites about the charts for Hero MotoCorp is the sudden pickup of news flow for the stock as well as volumes, and I think that's the more important feature which we are looking out for. I think that could probably be one of the triggers as well as the stock to watch out for. From the larger cap, traditional large cap four-wheeler names, Maruti, I think at 10,400, 500 levels, where it's trading, also looks very attractive. The stock, apparently from that, the break of the 10,000 mark has not managed to succumb under the selling pressure as well as break below those levels, and it's still maintaining the support of 10,000 mark. So keeping that as a, say, closing base support for Maruti would be bullish on the stock as well.
Okay, Hero Moto, Maruti, but today we also managed to, at the India Electric Vehicle Conclave, Tata Motors Passenger Vehicle MD actually managed to speak about the EV penetration in the country. Where does he see it going forward? Let's go cross and listen in.
We have already seen a very exponential growth in the last, especially 2 to 3 years, on the back of very relevant products, very practical products in the market, which was not the case earlier after the launch of Nexon EV and then a mass market product like Tiago EV. The growth has been immense. If you just see in the first 6 months of this financial year, the growth rates are 107%. I believe that in the next 5 years, the country has the potential of hitting about 25% of penetration. As far as we are concerned, we are targeting that we should reach that level in the next few years. With the launch of 10 products that we have planned for, we aim to be, say, by 2030, about 50% of our portfolio being delivered through electric vehicles.
In March 22, we announced a local manufacturing plant for batteries with about 7,300 crores investment at cell level localization. And of course, at some point of time, we'll be getting into motor manufacturing also. And with this, our first EV will be launched in the next financial year, 24-25. It will be a high-spec SUV designed from scratch as an EV. It won't be an IC engine converted to a car, converted to an EV car. So at the moment, it's a premium SUV. So it is in the upper segment, and we think we will get volumes here. Also, what we are doing is we will have export plans for this car. So we've thought about both the domestic market and export markets because we need these volumes to put up our local battery plant.